We're going to get over to Jared Blikre now with a look at how the markets ingested all this noise. But first, Jared, let me get your just broad takeaway. What surprised you from the tone or specific phraseology from the Fed chair today?
I'm going to put it from Jay Powell's perspective. I think he's happy with this press conference, namely because we didn't see a big move up or down in stocks. Now, had a big down move occurred, arguably that would have been in his favor, because there have been some statements since the last meeting, since Jackson Hole, saying that the Fed does not want to see the stock market rally on these events. And there's a good reason for that. So let me just get to some of the stock movement here. We can see it as a mixed board. Let me just put the S&P 500 up, and let's go to a 2-day view. Actually, this is going to be 1 day. And you can see usually on a net basis, we are not by the unchanged line at this point in the day. We're usually substantially up or down. Now, the last meeting in late July, we were substantially up, and we later learned that Powell was not happy with that arrangement because he was trying to convey the notion that he is hawkish as possible, that he's going to do everything, and the Fed is going to do everything they can to get inflation under control. And stocks being up kind of speaks against that. Here's the sector action. We see staples, tech, industrials. Those are in the green, all of them outperforming the S&P 500. Communication services, materials, that could be a dollar play. We can get to that in a second. Financials, those are the biggest losers, but nothing off by more than about 0.5%. And I just want to show you the stock movement in the S&P 500 on a longer term basis. That's the dollar. Let me get to the S&P 500. Here is today's price action. Now, this exceeds the price action of the prior 2 days, which is to say we went down, we went up, and we're back in the middle. And so everything is copacetic from the Fed's point of view, still fighting that inflation. We saw the VIX spike up to over 30. That was the highest amount in about 2 months, 6 weeks, something like that. And also taking a look at the bond market. Now, this is usually where the fireworks are. We see the 5-year T-note yield. It did spike to a new high. It is down 4 basis points right now. The 10-year T-note yield also made a new multi-year high, I think the highest since 2007, don't quote me, but ending down on the day. And the 13-week T-bill yield, now this is a key one too. This has been racing higher. This more accurately tracks, it's on the short end of the curve, what the Fed is doing with its benchmark interest rate, which is an overnight rate. This did not make a new high. So really this is a press conference and I think an FOMC statement that went as expected. Now here's the US dollar index. I don't know if we have time for this, but all right, let's get to this because I want to show you what the US dollar has been doing. Now it has been racing higher. That is what we know. And it has provided some of the global risk markets with a lot of consternation. So this is my dollar heat map. Everything on here is with respect to the US dollar. Now in the upper left, let's not forget what happened yesterday before we all woke up, or some of us woke up, is the Swedish central bank. They went up 100 basis points. The Fed only went 75 today. Interestingly, on a net basis, the US dollar is still stronger versus the Swedish kroner. And that is a central bank that raised more than we did. It just shows you that a lot of these other central banks around the world maybe have to catch up to what we're doing right now. But it does suggest that the US is in a better position because we have tackled this on a front-loaded basis, seen more of that action up front. Now, the U.S. dollar, the surging U.S. dollar, does present some consternation, as I've been talking about, not only for international, multinational corporations and their earnings, but also commodities. That could be good for consumers, weighing on commodities. Also, crypto prices. One of the things I haven't checked here yet today, and I think I'll close with this, kind of fitting that we're going to close my FOMC comments with a check on Bitcoin right here, because Bitcoin was leading the way up at the last press conference. You can see it's still up about 1.8% versus 24 hours ago, but this is a fairly muted reaction. So Bitcoin being the arbiter of was this a successful press conference from the perspective of Jay Powell, I'm going to say yes, guys. Bitcoin is saying yes.
Is the arbiter.
Okay,
yes.
Bitcoin, there we go. We're going to get that as your final word there, Jared. Jared Blikre, thanks so much for breaking that down for us.